All right, guys. So welcome to part 2 of this very simple strategy. Okay, this is a strategy that I look for every single day when the markets are open, and this is one of my favorite strategies. It's not my only strategy, but it's one of my favorite strategies because it's very, very, very simple. Okay, so let's just give you an example. Okay, I like to look at the 5 minute. All right, and this zone that you see right here is just like I showed you guys in the last video. This is the London session. Okay, we'll make that blue, and then this is the Asian session. So whatever session I'm trading in, right? Let's say that I'm going to be trading in the London session. I want to see price sweep above or below the previous session. Okay, and as you can see right here, London session swept above the Asian session. Now, some people might say the London session starts at 3. Yes, that's true. But when it comes to my strategy in this zone, this London session zone box here that you're seeing, I have this box starting at midnight. Okay, midnight. Now, once price sweeps above the Asian session, again, I want to look for either a bullish fair value gap or a bearish fair value gap, depending on what direction I'm looking to trade to. In this case, we're going to be looking to trade to the downside, so I want to look for a bullish fair value gap. So right here, we could probably find a bullish fair value gap. Okay, so right here is a bullish fair value gap right here. A bullish fair value gap. Okay, so we'll label that as well. That's a fair value gap. And once price closes below this fair value, this bullish fair value gap, it now turns into a inversion fair value gap. Okay, it turns into a inversion fair value gap. So inversion fair value gap, that's what it turns into. As you can see, price closed below that. So once I see that, I'm taking the trade. All right, now like I said, if you want to be safe, just wait for the pullback. You can either wait for the pullback into this inversion fair value gap, or just take your trade as soon as price closes below that. And then normally I just put my stop right above the current or the current high or low, and then I take the trade. And as you can see, guys, this is you can catch some really good moves just with the strategy. All right, this is a very, very simple strategy that you can use to take a trade on. Okay, look at this. You could have caught this big move in London session on. And by the way, you might be wondering what I'm looking at. This is SPX. This is S&P 500 right here. You could have caught a big move in London session right here. Okay, now let's see if we can look for another one. Now you can also catch a move back to the upside, because remember, once price closes below the previous session, most likely you might see a pushback, a reversal. So you could have took a trade to the upside right here. Okay, now I'm going to show you guys one more example. Now, this strategy doesn't play out all the time, but majority of the time it does play out. Let me see if I can find you guys another example. Okay, here's another example here in London session. Okay, first we're going to mark out our Asian session, and then we're going to mark out the London session. Okay, we're going to make that box blue. Okay, and as you can see, price swept below the previous session, which was the Asian session. So once I see that happen, once I see price sweeps above or below the previous session, I know that there's most likely a reversal coming. Okay, so in this case, it swept below the previous session. So I'm thinking, I'm hoping, and most likely what's going to happen is that price is going to probably start reversing to the upside. Okay, so again, in this situation, I'm looking for a bearish fair value gap right here. Boom, This is going to be my bearish fair value gap right here. Okay, I even make it red for you guys. That way you guys can see. This is how I catch good moves in the markets, guys. This is a very simple strategy. All right, but it can help you catch some really good moves. So this is a fair value gap right here, a bearish fair value gap. Now, once price closes above, I'm taking the trade. Once price closes above that fair value gap, I'm taking the trade. Now, also, once price closes above that fair value gap, it turns into an inversion fair value gap. So what I'm going to do here, I'm going to just label this for you guys. It's going to turn into a bullish. It's going to turn into a inversion fair value gap. Now, I'm either going to take the trade here as soon as it closes, or I'm going to wait for price to pull back into this inversion fair value gap and take it to the upside. So literally, you could have caught this whole move to the upside in London session. And normally I get in right here. I put my stop right below the current session that I'm trading low. I put it right below. And look at this. Like, this is crazy. That move right there, guys, could have made you some really, really good money in the market. Like, it's crazy how simple this strategy is. Okay, it's very, very simple. It's that simple. Okay, show you guys some more examples. Okay, now you can also could have caught this move right here. This is the U.S. session, swept above London session. So what you would have did was you probably just look for a. I probably wouldn't take this because I'll tell you why. Because price is far away from this. What's next? I probably would have waited for price to come back up here, but price never came back up here. So I probably would have never. When price is just too far away from the fair value gap, I'm not gonna take it. I'm gonna just wait for price to pull back into it. But you could have took the trade. You could have caught this move in the if you were looking at the London session. What you could have did was you could have just that's a small you could have caught this move, but normally whenever the session that I'm trading, I like to see price come below it or above it. All right, let me see if I can find you another better example. Like I said, it doesn't happen all the time, but if you can catch this strategy, you can definitely catch some good moves in the market. Like right here, let's see. Price is way, 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 way below the previous session here. So you want to look for a bearish bearish fair value gap. Now, it doesn't look too good here. So sometimes what I do is, since I'm on the 5 minute, I'll also go to the 1 minute, but I'm not going to go through all that. I'm going to see if I can find you some more examples. Let's go to another pair, because I look at multiple pairs. I don't just look at only one pair. Let's go to the Dow Jones. Let's see. I want to give you guys some good examples. This is a simple strategy that you could look for in the markets on a daily basis. Here's another good one right here. You got the Asian session here. I'm going to mark that out there for you guys. Boom. And then we got the London session. Okay. We got the London session. I don't know what. How can I change that? Okay. There we go. All right, boom. Make that blue. So now, same thing. Once price sweep below the previous session, I'm gonna look for a bearish fair value gap. This is a bearish fair value gap right here. Okay. And I'm gonna take the trade. It's kind of like the same trade, like on ES, on the S&P 500, but you could have caught that trade. Put your stop there, and literally, like, you could have caught this whole, you could have rolled this trade all day, all through US session right there. Big move to the upside. Another example, like you're gonna just keep seeing how this plays out. Like, look at this. This is all right. This is London session. All right, this is London session. All right, and then right here is the U.S. session. All right, now once you see price come below it or above it, again, what you want to look for is either a bullish fair value gap or a bearish fair value gap. In this case, we swept below it, so we're going to be looking for a bearish fair value gap. I see one right here. Actually see two, but I'm going to just use this one here. And there you go. This is another trade that you could have took advantage of in U.S. session. This is U.S. session. You could have took like literally a simple trade to the upside. As soon as I see a candle close above it, you can wait for price either to close above it, or you can wait for price to come back and retest that inversion fair value gap. Because remember, when price closes above that bearish fair value gap, it's going to turn into an inversion fair value gap. And look at this. You could have caught this whole move just like that. It doesn't get no simpler than that. Like, it's just that simple, guys. I can just keep showing you guys. Like I said, it doesn't happen every day, but most of the times, this is how it plays out. Okay. You could have caught. I'm sure there's a bearish fair value gap down here somewhere. You could have caught a quick scalp to the upside, right here. There. And then you could have also took a trade to the upside right here. I would have took my trade right there. I would have had my stop right below that current session low, and you could have caught a quick move to the upside. You could have caught at least a 1-to-1. All right, you could have caught at least a 1. That's if you're scalping. Okay. And also, what helps too is to understand what type of trend you're creating on the higher time frames. If you know what the higher time frame trend is, this can literally help you catch some good moves in the markets. Okay. So again, you could have caught a good move here, but I don't like this right here. Here's probably another good example right here. You see, once price closed below it, the previous session, I'm looking for a bearish fair value gap. In this case, right here, boom, that bearish fair value gap right there. Once price closed above it, it turns into an inversion fair value gap. I'm putting my stop right below the current session low, and literally you could have just caught this whole move in the US session. You see this? You see how this is playing out? Like this is how I'm catching moves. This is how I'm making money good money every single day. All right. This is also how I'm passing prop firm challenges as well. This is how I'm actually passing prop firm challenges. Okay. Now, this is a Dow Jones. Okay. This is the Dow Jones. Let's see. And maybe you could have drew out a bullish fair value gap right here. Once price closed below it. But again, I probably won't take this because it's just too far away from the inversion fair value gap. And when it's a long candle like that, I kind of avoid it because you never know, it just might just keep, it's just too far away. I'd rather wait for price to pull back into that. Okay. Let's see if we can find another one here. Wow. You got the swept below, but I don't see. I mean, we could have caught this move here. You could have caught this move here. So you see this sweep here, and I'm actually seeing a bearish fair value gap right here, as you can see. All right. Once you see that bearish fair value gap, you're gonna wait for that price to close above it, and then you could have took trade right here on that. This would have been a big stop loss. Normally, I wouldn't put my stop loss down there. I probably put it right below the previous session low, which was the London session, and then I would have took the trade to the upside. All right, you could have called it all the way up here if you wanted, if you were to hold it there. But that's another win right there, guys. That's another win for you guys using this simple strategy. Okay. That was a choppy day, so I probably would have took a trade here. But once price moves like this, I just end the day because I don't like how the markets move like that. All right, so let's see. Can we find another example here? Boom. I'm gonna do two more examples, and then what I'm gonna show you guys, I'm gonna show you guys exactly how you can know where to get out of the market. Okay. So what I'm gonna do is I'm gonna do this real quick. All right. So we have a session sweep, price swept below. I'm gonna look for a bearish fair value gap. We have a small bearish fair value gap right here. I mean, you could have took this trade. Now, what you could have did was you could have also, like I said, sometimes I look at the 1 minute chart as well. But this is hard. Like when price is like far away from this, when prices, and sorry, I got people working upstairs here, probably making a bunch of noise up there. But you could have took the trade. I mean, you know, you would have won it. But if it's if my price is far away from my fair value gap, I don't like to take trades like that. But you could have took that trade there, and you could have won. All right, so I'm gonna show you guys one more example, and I'm gonna show you guys an example of how you can know when to get out of the trade, how you can like swing trade this, how you can swing trade a trade, how you can hold the trade longer and longer and longer. Okay, I'm gonna give you an example of that, but I'm gonna give you one more example. So we got the session sweep, price came and swept above the previous session here. Now I want to look for a bullish fair value gap. This is a tricky one because it's a lot of spikes right here. Okay, so I can tell you, matter of fact, I'm gonna show you this right here. So sometimes when I don't see a bullish fair value gap, I also look for a breaker block. Okay, so in this case, I see a breaker block right here. You see this red candle right here? Right, this is the lowest red candle. So whatever the lowest red candle between the higher high here and these two higher highs, because this is a higher high, higher low, higher high. The lowest red candle, I usually draw a box on that. Okay, boom. This is going to be my breaker block. So if I don't see a bullish fair value gap or a bearish fair value gap, I'm going to draw my breaker block. Okay, and right here is my breaker block. Once price closes below that breaker block, just like how I use the fair value gaps, I'm also taking the trade as well. Okay, so you could wait. If it's a long candle like that, I like to wait for price to pull back into it. So in this case, I probably would have got in up here. I had to put my stop right there, just above that current session high, and then I would have took the trade to the downside. Simple as that, guys. Like literally, sometimes you can hold these trades all the way down here. Like you can literally hold these trades for longer periods. All right. So how do you know when to get out of the trade? Okay, I'm going to show you guys that right now. Okay. So I also use what is called anchor VWAPs. Okay. I'm going to maybe make another training on how I use these anchor VWAPs, but normally what I like to do is I like to anchor a VWAP at the start of the US session right there. And then what I also like to do is I like to anchor another anchor VWAP on the last candle that touched the previous VWAP. And the last candle that touched this VWAP was this candle right here. Okay, you see that? So what I would do is I would get my anchor VWAP tool again, and then I will anchor another anchor VWAP right on the last candle that touched the previous VWAP. Boom. All right, do that. I'll just label it blue for you guys so you understand. And literally, I will hold the trade hold the trade. If the trade doesn't come, if price doesn't come and do this, I'm still holding the trade. The only way I'm gonna get out of the trade if price come above this handoff. I call it the handoff. If price does this, then I'm getting out of the trade. But if the trade doesn't do that, I'm gonna continue to hold the trade, guys. Like, this is how sometimes I'm able to like hold the trade. You could have hold the trade all the way down here. Why? Because price is still below this handoff right here with this VWAP right here. If price doesn't, if you didn't close down here, then I would have definitely closed here. I would have closed right here. Okay, I would have closed right here. But if you caught a move like this, like, you know, there's no need to be greedy. But if you didn't get out, if you didn't get out of the trade here, then I would have got out of the trade here. Okay, you still would have caught a decent move, but I would have definitely been out of this trade. Okay, but this is how I'm able to hold trades for longer periods. So I'll make some more videos on how I do this, how I use these VWAPs, but this is how I know when to hold the trade. If the trade doesn't close above this blue line right here, I'm not getting out of the trade. I'm just going to hold it. Okay. So hope you guys got some value, but this is a very, very simple strategy. This is not my only strategy. I got multiple trading strategies. I'm going to teach it to you guys in the next couple of days, but hope you guys got some value. If you did, make sure you like, comment, and share this video. But this is my strategy. Like, this is a very simple strategy to do, but this simple strategy can make you a lot of money. It can help you pass prop firm challenges. It can just change the game for you. Okay. So with that being said, I'm Andre Ketna here from West Palm Beach, Florida. I will see you guys on another video. Take care, y'all.